Hi, friends. Dr. Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to see what is a fair value gap. We will also see how it is created step by step. We will also try to understand why a fair value gap can be an important area for you to enter a trade and become a profitable trader. This strategy is a rocking strategy, and this strategy can make you a profitable trader. When you use this strategy for entering trades, this gives awesome results. So we will see how this strategy can be used to make sure you become a profitable trader. By the way, guys, I have a small special request. I have been watching the analysis of my videos and I have seen that 70% of my audience, they come, they watch the video and they go away. I request you to kindly subscribe to my channel if you're really enjoying these videos because it really motivates me every time I see a new subscriber. So please go ahead and subscribe to my channel and smash that bell icon. It really helps me. Now let's get back to the topic of this video. Let us see how a fair value gap looks like. A fair value gap is created with three candles. Candle number one can be a bearish or a bullish candle. But candle number two has to be a pure bullish candle. And candle number three also should be a bullish candle. There should be a gap between the high of candle number one and the low of candle number three. This gap that is there between the high of candle number one and the low of candle number three is called the fair value gap. Now, this area is normally on the body of candle number two. And this is exactly how a fair value gap setup looks like. This particular type of price movement gives us the psychology of the buyers and sellers currently present in that particular financial instrument. Especially because of the speed bullish movement, we come to know that this is an area where the institutional traders, they have infused a huge amount of funds because this is what they were looking for. And that is the reason the price shooted up so fast. Now, as a retail trader, what can we do? We can just join in the rally. As you know, the price movement happens in the market because of institutional investments and withdrawals. Then, as a retail trader, we can just enjoy getting into the rally when the price starts moving. This is exactly what I'm going to show you in this video. How do you enter into this rally? Now, as a retail trader, what do you do once you see a fair value gap? As a retail trader, you have to wait for the price to retrace back into the fair value gap zone. Now, let us understand why will the price retrace back to this fair value gap zone. Reason number one, the institutions, they wanted to do a huge amount of buying. They entered a huge amount and the price went up. So by the time they could enter all their contracts, the price had already left their zone. So now they have to wait. The best thing is whenever the price moves up, there is always a lot of profit booking. And when the profit bookings happen, the price comes back again into the zone. And this is where the institutions are again going to enter this trade. And this is the opportunity for you as a retail trader to enter into a trade. Reason number two, why would the price retrace back into this zone? Now, as soon as the fair value gap happens, it normally breaks the resistance zone. And there are a lot of technical analyst traders who enter into the trade on the basis of breakout. And then what do? They put their stop loss below the latest support zone. Now, this latest support zone also falls in this fair value gap zone or very close to it. So what happens next? This becomes a nice liquidity pool for the institutional investors. So the price comes down to make an awesome liquidity sweep. And once the liquidity sweep happens, all the sell trades are taken, automatically the buy trades gets executed and the price moves back up from here. So this is the second reason why the price retraces back till the fair value gap zone. Now let us understand what is the third reason why the price retraces back after such a wonderful breakout. Now you must understand when the institutional traders infuse such huge amount of funds, the price rockets up, leaving a lot of pending buy orders over there, which was waiting to get executed in that particular zone. Now, because there are so many pending orders over there, the price retraces back once again down to the fair value gap zone, executing all these orders and then shoots up like a rocket. So there are three reasons why the price retraces back to the fair value gap zone. A lot of buy orders get executed and then leaves the fair value gap with speed going in the bullish direction. Now, another thing to understand that within the fair value gap, there are three levels. The top level is called the premium price. The middle level is called the 50% level, and the low level is called the discount price. All three levels play an important role when you look at a smaller time frame to take an entry into this trade. I will explain to you how this works. Now, since you have understood what is a fair value gap, how it looks like, why it is happening, now let us understand the main reason why you are watching this video. How do you enter into a trade? How do you place your stop loss? And how do you place your take profit target? Let us understand that step by step. Now, to identify a fair value gap, you have to look at a higher time frame. In this case, we will take a 1 hour time frame. So in a 1 hour time frame, you have to look for a fair value gap. Once you identify a fair value gap in the 1 hour time frame, you then move into a 5-minute chart. Now, in a 5-minute chart, the price movement will look something like this. It slowly goes up, comes down, goes up, comes down, but you will see the waves towards the upward direction is much bigger than the waves going down. That's why the price is moving in an upward direction. Now, once this happens, you have to wait for the price to retrace back into the fair value gap zone. Then the price gradually retraces back into the fair value gap zone, and you know why, because we have already explained that. The next important step is to look for the 1, 2, 3, 4, 5 movement within the fair value gap zone or little above the fair value gap zone. You will not find every time exactly inside the fair value gap zone. Sometimes it starts inside, but the point number 5 will be above the fair value gap zone. Your entry point is point number 5. Your stop loss will not be below the support zone. It will be below the fair value low level. Okay, so your stop loss is going to be below the fair value low level, and your target will be 1:2. Now, there are traders who can take a bigger target, but initially, when you're starting out, go for a 1:2 risk to reward ratio. Remember, no trade should be executed without keeping in mind the risk management. So please do not infuse more than 0.5% of your equity in any particular trade. If you are a seasoned retail trader, you can go up to maximum 2% of your equity while you're infusing in one particular trade. Remember, this is trading, not investing. So you need a lot of opportunities to make sure that you survive in the market. So max 2% of your equity. So I hope traders, this setup is understood very, very clearly. Now let us take a real chart and see how it looks on a real chart. So for this, I'm taking an example of USD CAD 1 hour chart. So this is how the setup is looking on a 1 hour chart of USD CAD. Now you can clearly see this is our candle number 1, our candle number 2, and candle number 3. And there's a clear gap between the high point of candle number 1 and the low point of candle number 3. And this area between the lines is your area of fair value gap zone. You can also see that this area is a previous resistance zone because this candle came up to here and then retraced back. So automatically this is a breakout of a resistance zone. If you remember the point number 2, This is where a lot of technical analysts will enter their trade and put their stop loss inside this fair value gap zone. At the same time, you should make sure that you check the date and the time so that when you move into a smaller time frame, you do not miss out. So here it is 2025, 725. Now you move into a 5-minute chart. So first you check, yeah, the date is fine, 2025, 0725, and you can see clearly in the 5-minute chart how the candlestick setup looks like. You can clearly see the two lines, which is your fair value gap zone. Now you wait for the price to make your setup, which is your 1, 2, 3, 4, 5 setup. There you go. As the price moves out of the fair value gap zone, you can see it is creating your 1, 2, 3, 4, 5 setup. So you can enter once the price creates the point number 5 and starts moving up. So you enter at point number 5, put your stop loss below the fair value gap low point, and keep your target at 1:2, somewhere up here. Now let us go into a 1 hour chart and see how the price moves. As you can see, same 2025, 0725. Within few hours, the price reached our target and gave the take profit of 1:2. But what is more interesting is look at this beautiful movement of the chart. The price has continuously moved up, creating higher highs and higher lows. If you are a seasoned retail trader and if you understand the price movements and higher highs and higher lows, you can actually wait till it continues going up. Currently, this is at a 10 times profit. Isn't it awesome? So friends, I hope that you have understood this setup for a bullish fair value gap trading strategy. All you have to do is use the opposite strategy, everything opposite to what I have explained for a bearish pattern. The bearish pattern is exactly opposite of the bullish pattern. And this is how it looks like. Very, very simple. So friends, I hope that this video has made it extremely clear that how do you identify a fair value gap, why it gets created, and why the price retraces back to the fair value gap zone. And after that, you can look into a lower time frame to enter into a perfect entry using the fair value gap zone. So this strategy is called the fair value gap zone trading strategy. It's a very, very unique, but a very, very profitable strategy. Friends, one thing I want to tell you is you cannot get successful if you do not practice these things. In trading, you have to practice these strategies multiple times before you infuse your own funds. So practice, patience, and persistence is very, very important to become a successful trader. Friends, if you love the way I'm creating these videos, please like and share these videos. So like you, there might be many others who could see these videos and learn from it. And friends, I would love to see your comments on the video. Whether it is a simple thank you or something in length, I would love to see it, read it, and comment back on it if it makes sense. Friends, that's all in this video. But before I leave, I cannot stop saying this. Keep learning, keep growing, keep getting better every single day. That's all. Thank you. Namaskar.